Good day, folks. Jim here. It is Saturday the 10th of July. Well, we've just finished a rather topsy-turvy week, punctuated by some pretty violent risk-on, risk-off movements, with any number of excuses given as to why we've seen the choppy price action. Was it the Fed? Was it the People's Bank of China coming down hard on Chinese US-listed companies? Was it sinking bond yields as in the inflation outlook changes? Was it the latest Delta variant of COVID? Who knows? There's a plethora of theories being put forward, but I don't think anyone really has any hard and fast answer as to why the asset prices moved as they did. But anyway, Friday finished on an upbeat note. The US dollar receded back a little bit. Safe haven demand diminished, so the US dollar came off a touch. Stock markets, which had a bit of a sell-off on Thursday, they rebounded quite nicely and actually finished the week back close to their all-time highs. Commodities were choppy as well. Oil fell quite hard during the week, but then bounced back on Friday. Looking ahead, Monday's going to be quiet. Tuesday sees inflation data from both Germany and the US. Wednesday sees central bank meetings from the RBNZ and from the Bank of Canada, while Fed Chairman Jerome Powell he'll be testifying to Congress on Wednesday. Thursday sees employment data from Australia and the UK, as well as the Chinese GDP number, so that's going to be quite important. And finally, Friday, we end up with inflation data from New Zealand and the BOJ meeting being the main events of the day. Anyway, without further ado, we'll go and have a look at the chart, starting as usual with the dollar index.
Okay, folks, and there isn't actually an awful lot to say. The previous week, the dollar index finished at 92.25, and yesterday or today, Friday, it's closed at 92.12. So really, there's absolutely nothing in it. And the index, it seems to me, is trying to make up its mind whether to try and bust out above the neckline of this inverse head and shoulders that we've been watching. And if it does, I think we can go a fair bit higher. But until then, it looks as though we're just going to consolidate. And being July in the Northern Hemisphere summer holiday season, I don't think we're really going to see too much action at all. So further consolidation at or around the neckline here would not really be a surprise. The weekly charts do look mildly positive still, so I kind of retain a hope that we might break above here and actually see a bit of action. But the dailies, as we'll go and have a look now, they do seem to be running out of steam a little bit. Okay, here we are with a daily chart, and as you can see, there's not an awful lot going on, and we're sitting here consolidating just below the neckline, and I suspect we're probably going to continue to do so. The daily charts, which had been pushing towards the top side, now seem to be running out of steam somewhat, and so further consolidation in thin summer markets would not really surprise me. So with that, we'll go and have a look and see what it does mean for the euro and the other majors. So here we are with a daily chart of the euro, and as you can see, it's sitting above the neckline of its own head and shoulders. The daily charts, which have been pointing lower, maybe basing a little bit. So early in the week, there's nothing going on the calendar on Monday. I expect a pretty quiet day, and it wouldn't surprise me if sort of 118 and a half to sort of 119 really covers the session. Let's go and have a look at the 4-hour charts. If anything, I mean, the indicators are pretty flat, but we might see a bit of a push higher. I'm not really too enthused by any of this at the moment, quite honestly. If we saw it back above 119, you'd probably sell it on the day with a stop loss above 119.25. And likewise, down at this sort of level here, 118, sort of 25, 30. Probably be a buy down there on the day with a stop loss just below, well, probably put a stop loss just below 118 on the day, I think. But it's it's choppy and it's sideways, and it's not really giving me much enthusiasm to get too involved. Dollar yen. Dollar yen had a nice move down. The yen saw some decent demand as risk-off sentiment grew. That was on Wednesday, Thursday, but that turned around a little bit on Friday, and the dollar made a bit of a recovery back above 110. But realistically, it's trading in this where it's been really for quite some time now. As far as Monday goes, the 4-hour charts look mildly positive, so I'd probably be a buyer around just below 110, with stop loss perhaps down around 109.50. But looking for a bit of a squeeze to the top side But this can change very quickly, of course, if risk sentiment were to change. And if we see another risk-off move, then the dollar will break below this previous level here, this where we saw decent support at the FIBO level, and below 109.50. I guess we can sort of think about heading back towards these lows down here, 109.20, and potentially even lower, although I don't think we're likely to see that early in the week. The daily charts, as you can see, we came off, hit the FIBO level and bounced. I have to say the dailies do look a bit heavy. So on the top side, I guess if we saw a rally in the next couple of days towards 111, you'd probably sell it up there with a stop loss probably above 111.15, 20, something like that. But once again, I'm not overly enthused. I think we're just going to trade in a choppy sideways consolidation phase. Sterling, I think Sterling's outlook depends all on the outcome of the football. If England wins, Sterling will take off. You'll see it back above 140. If they lose, we'll probably be down at new lows below this 137 level on Monday. The 4-hour charts aren't telling us an awful lot. The dailies are pretty flat as well. We're trapped between, on the wide, we're trapped between the 100-day and the 200-day moving averages. And I think that's likely to continue for quite some time. I don't really see us moving too far. The football result will have an influence on sterling on Monday, so you're probably going to see more action there than anywhere. So keep an eye out for that. The Aussie is sitting right on the 100 and 200-hour moving averages. It had this sell-off on Thursday as the risk-off move happened, but recovered steadily through Friday and finished back towards 75 cents. My own view is the 1-hour charts retain a positive bias. The 4-hour charts seem to be turning higher as well. So medium term, as I've said before, I am a buyer on dips. I don't think we're really going much under sort of 73.5, maybe down to 72.5 cents in the weeks to come. But overall, I'm looking for, as global growth continues to recover through the year, I think demand for Aussie will increase, and I'm therefore looking for a move back towards 78 cents at some time. But the 4-hour charts look positive, and we've got this bullish divergence here, so I think we can see a bit more of a recovery. The dailies not telling us an awful lot really. They're pretty flat. So we have reached this FIBO level. If we go through that, which is at 74.15, then maybe we head down to a lower level. But at this point in time, I think that's going to be fairly good support. And I'll be a buyer at 74 if and when we see it, because I think eventually we're probably going to go and test this 200-day moving average again, 75.70, and potentially even the 100-day at 76.80. Don't think that's likely to happen this week. We have got some Australian data out later in the week, the unemployment numbers. They've generally been pretty good, but we've got lockdown here in Sydney. So the economy's going to be pretty much on the defensive as far as the coming weeks concerned. So possibly we just chuck around here at 75 cents, but ultimately I'm looking for a move back higher. So that's about it. I'm going to go through and do the commodities. Okay, we'll start with oil, West Texas Intermediate. And as you can see, we had quite a sell-off during the week following the outcome of the OPEC meeting, before a decent bounce on Friday as positive risk attitude set in once again. And overall, my strategy of buying dips hasn't really changed, and we managed to get long down around this area actually, and my longer-term outlook hasn't changed. The dailies are actually pointing a little bit lower, so I think we might chop around here for some while to come. I think sort of 70 to this high up here will cover it. Between $70 and $77 a barrel. I would be trading that for the time being. But longer term, I think with the weeklies looking vaguely positive and the monthly charts looking positive, I think we're probably going to end up going a fair bit higher. Now this level here, as you can see, that's a strong resistance, and we're not. $77 a barrel is 50% of the whole move down from 147. So I don't really expect us to go above this 50% FIBO mark for a while to come. July, maybe August either. I think we'll probably just chop around. So as I say, $70 to sort of $77 a barrel covers a range, and I think that's where we're going to be stuck. But when it does go above here, then there's not an awful lot to stop us going to $80 and beyond, potentially up to this 61.8% up at 93. Coming back a little bit to the weeklies. If we do break this, the weekly chart, the fall here from $107, the 76.4% FIBO mark is at 83, so that's going to be huge as and when we get there. But before then, I think $80 a barrel is going to hold us up. But I do think we're probably going to go there, so it's worth keeping an eye on oil. Gold, having traded below the 100-day moving average for some time, it recovered last week and now sits between the 100 and the 200-day moving average. The daily indicators do look mildly positive, so I wouldn't be surprised to see a test of the top side around 1825. If we get above there, then I think we can start to motor, but until then, I think, given that we've not got an awful lot on the calendar this week, I suspect we're probably going to remain within the sort of 1750, 1825 level. The 4-hour chart's not telling us an awful lot, and as you can see, it looks fairly choppy. If we do go higher, though, and can take out this level here and the 200-day moving average at 1827, then I think if we come back to the hourly charts and we're looking at the FIBO levels here from the sell-off at where was that, 1921 or so, then we have got resistance here, 1813, 1815. But once we can take that out, the 1832 and then 1852 on the short-term charts is where we're looking at. As far as the downside is concerned, we're going to have support here just below this 1800 level. And then again at 1787. And potentially, I suppose we can come back down here at some stage. But overall, I'm still a buyer of dips because I remain pretty bullish on all the metals, all commodities, based on the global growth outlook. But that's a long-term future thing. So overall, I'm a buyer of dips on all the metals, including gold. Finally, we'll have a quick look at the stock markets. And we'll just take a quick look at the S&P here. And the mantra hasn't really changed. The uptrend continues. And really, I think it'll continuing until it doesn't, at which point we'll probably see quite a sharp sell-off. We did actually get one last week. Let's come back home to the 4-hour charts. We had this push lower down to sub 4,300, but we're back close to the highs now, and I suspect the slow march higher is going to continue. This long-term rising trend line is important, I think. So as long as we're currently at sort of 42.20, as long as that holds, we're okay. As far as the momentum indicators go, well, the 4 hours aren't really telling us an awful lot, possibly pointing a little bit hard to start off on Monday. The dailies equally. They're not overbought, they're not oversold, so I think the trend can very slowly continue. Bear in mind there's a little bit of mild bearish divergence here, but every time we have a sell-off and a recovery and hold this uptrend support, I think that's probably quite healthy for the overall market in the longer term. If we do go below here, then I guess the 100-day moving average down around 4,100 needs to be taken into account. That could come over the horizon. But that's some way off at this point in time, and I'm not really expecting to see anything there. As far as the local market goes, the Aussie stock market, this is the ASX 200, and as you can see, that's been very choppy but very range bound, and really I think it's going to continue to be so. It's going to struggle to break high while we've got lockdown going on in Sydney and the COVID issues. But overall, I'm hoping for a break higher, but until we see some more positive news out of the local economy, then I don't think we're going anywhere. But either way, I think use these as parameters, and you can buy the lows, sell the peaks. But at any time when we do make a decent break, either one way or the other, I think I'll probably just follow it and go with it. So that's the 4-hour charts. As far as the dailies are concerned, as you can see here, we're sitting just below the all-time highs, just 7,400. Now the dailies really, where they were becoming a little bit overbought, this consolidation has allowed us to correct that situation. And really, I think as long as the US markets are going to go higher, then I think the Aussie stock market will join in, and in fact could even catch up, because I think commodities, as I said, I'm very bullish on commodities longer term, and the Aussie stock market's heavily weighted in that direction. So I'm basically looking to buy dips If we weren't at any time to go below this level here, sort of 7100, then I'd have to think again. 70.25 is the 100-day moving average. So we'd have to think about that at the time. But right now, I'm looking to buy dips, sell rallies as long as we're in this range. I prefer to trade from the long side, looking for an eventual break to the top side. So that's about it. We'll have a quick look at the overall calendar. Okay, so here we go. So Monday, not an awful lot going on, although do note that the football final will finish at about the same time as the market opens on Monday morning. So we could see some volatility in sterling. As I say, if England win, we can look towards a move towards 140. If England lose, we'll look towards 137. And as a supporter of England for the last 60 years, my money's on 137. So not that I've got any inside information at this point in time. So looking forward to Tuesday. We've got some secondary Aussie data and the Chinese trade balance. That might move the Aussie around a little bit. Bank of England minutes, and then we've got both German and the US CPI. So that Tuesday could see some volatility. Wednesday will be central bank meetings for the RBNZ, and then later the Bank of Canada. I think, yes, the Bank of Canada pops up. Before then, though, we've got UK inflation data to come, and that's really about it. US PPI as well. Actually, late on Wednesday, we've also got Fed Chair Powell. He's going to be testifying to Congress, so that's probably going to be the main event of the week as it happens. So keep an eye out for that. Later on Thursday, though, we've got Australian unemployment data and some important Chinese data headed by the GDP for Q2, as well as the retail sales, industrial production, and that sort of thing. UK unemployment comes next, and then the weekly jobless claims coming out of the States, and some secondary US data, capital utilisation, industrial production, that sort of thing. Finally, Friday winds up. There's not an awful lot out on Friday, but we could see a bit of action in Asia. We've got the New Zealand Q2 inflation data and the Bank of Japan monetary policy meeting. Later in the day, we've got the EU CPI, and that is followed by the US retail sales, which so that could create a bit of activity late Friday afternoon. But apart from that, we've also got the Michigan Consumer Sentiment Survey for July. So it could be a reasonably active end to the week. But we'll leave it there for now, and we'll talk to you next week. Cheers.